Godspeed. Ingrid has 25 years banking and financial market experience, 8 years of which was in information technology. Ingrid is a CDSA. Now, if I understand correctly, that's a Chartered Director issued by the IOD of South Africa. And has an LLB, MBL, BCom degrees from the University of South Africa. She has worked with National Treasury as the Chief Director, Financial Sector Development in the Financial Sector Policy Unit. Before joining National Treasury, Ingrid was at Nedbank, Deloitte, Tiba Bank, which is now Ubank, Absa Securities and Absa Capital. Ingrid has also published a number of books. She has, however, since retired, and she is comfortable and very calm and collected, and she will be talking today about the role of financial inclusion in the financial system, in the payment system. Ingrid, let's put our hands together.
Can you hear? Thank you. I wish I could retire. Unfortunately, I can't. I don't know who can ever afford to retire these days with the way things are. I've left Treasury a month ago, so I just want a disclaimer. I don't believe the policy positions have changed. I haven't seen anything to that effect, so I'm going to speak to Treasury's policy positions on certain of these matters around financial inclusion. I just want to... Where's the gadget? Where is it? Is it off? Great, thank you. I want to first of all place financial inclusion in the context of the financial sector reforms that are currently underway, and speak really to the 4 policy objectives that the National Treasury has for the financial sector going forward. The primary one being financial stability. Obviously, if your financial systems are not, and your financial sector is not stable, you have nothing. You have to have a stable financial sector, both in terms of the institutions, each individual institution, which is microprudential supervision, or macroprudential, which is the system as a whole, the financial system as well as the various market infrastructures. So the financial stability area is key. The second one is market conduct, in other words, how institutions behave towards consumers, both important, both at the retail side and the wholesale area. Then there's financial market integrity. That goes to the anti-money laundering, that you don't do that your markets themselves are not used for fraud and misused. Financial inclusion is key as well, and there are 2 aspects here, both to develop the financial sector for inclusion, in other words, to allow more institutions to come on board. And possibly this could be a policy objective of its own, in other words, improving competition in the sector, because we know it's currently dominated by a few large institutions, to improve competition in the sector, as well as create level playing fields. Because it's easy to say you must allow everybody to come in, but there must be level playing fields. You can't hamstring the bigger players for the sake of allowing little players in. You must have level playing fields. All these policy objectives are set out in the policy document of National Treasury, a safer financial sector to serve South Africa better. The important thing with financial inclusion, and I think this is a key issue, financial inclusion is not something you achieve on its own. Financial inclusion is not a target of its own. The issue with financial inclusion is to achieve economic development. This is why the inclusion of financial inclusion of small and medium enterprises has become so important going forward because it aids economic development. But it really needs to, if we look to financial inclusion, we're looking for sustainable provision. It's no good including people and the institutions that do the inclusion fail because it's not sustainable. We also have to make sure it's beneficial use, that it's of use to the consumers that are using those financial services. It's generally seen as something needed for the poor and vulnerable, but issues lately have come up in terms of the exclusion of larger and wealthier players simply because of the anti-money laundering provisions we have. And we look, I mean, in South Africa, a good example has been Oak Bay. Actually, can we term what's happened to them financial exclusion? I'd be really interested in your viewpoint. The point is, we've always seen financial inclusion as the lower end of the market, the bottom of the pyramid, to make sure that financial services are provided for the poor and vulnerable and those who don't have access to financial services or have access to financial services but very poorly provided. And typically the services people are looking for are remittances, and we see that as the key entry point. Most individuals at the low end of the market are looking for the remittance services. Then, of course, there's payments, savings, insurance, and borrowing. National Treasury, of course, is focused on borrowing for the creation of wealth or for productive activities. It's not credit for the sake of consumerism, because that doesn't create wealth and doesn't build and doesn't create economic development. By the way, stop me any time to ask a question if you need to. What's very important for us as National Treasury is to monitor where financial inclusion is at the moment. And I think a lot of people miss the point sometimes with financial inclusion. By the pure definition of whether our society has bank accounts, South Africans are very well included. In the FinScope survey in 2015, 77% of adult South Africans have bank accounts. So when people say no, there are 2 billion people across the world who do not have bank accounts, who are financially excluded. South Africa has really got a very good record in terms of giving people access to financial services and to bank accounts. Now, there's been a lot of debate around FinScope and whether it's an acceptable statistic, but I want to show you, I also think we need to look at the trend from 2010, where it shifted substantially up to 77%. Now, the other statistic, which is Findex, which is done by the World Bank, also shows a major improvement in financial inclusion, which is why when you consider products like M-Pesa, and this has always been National Treasury's issue, you cannot import solutions from other countries and think they're going to work in your country. This in South Africa. The same as we can't export solutions to other countries and think they're going to work in that country. Each country is like an individual. You have to assess its needs and its ability to cater for this product that you want to bring on board. You need to look at it individually. Now, if you bring a product like M-Pesa into South Africa, that's already 77% banked. What are the chances that M-Pesa is going to succeed? Why did it succeed in Kenya? And it's an unbelievable success story. It's because nobody was banked in Kenya. And you bring it here, and you think it's going to work the same. It doesn't. You have to consider the environment that you're bringing your innovations into and whether they will actually succeed there. All right. So although we have these spectacular financial inclusion numbers and access to financial services, several challenges remain. First of all, usage. In other words, everybody's got a bank account, but what do they do with it? They use it as a dump, and what's that terminology? Dump and remove. The moment the money arrives, they withdraw it all, and they basically use the cash to do their payments and their transactions. So South Africa really, for the majority of the population, is really still cash-based, even though people have access to these bank accounts. So that is one area that we need to address. The other area we need to address is savings. We don't save. Now, a lot of people say it's because we don't desire to save, or because we like to spend, which is probably true. But because you can see that from the over-indebted stats, that we like to spend, we want stuff. But we do believe, and I think the statistics from Old Mutual do actually support this, that there is a lot of money lying in mattresses for the simple reason that people can't save it in a formal institution. So they bank it in their mattress. And a certain of those stats show that, for example, 17%, and this is their survey, 17% of people keep all their savings in cash. And a lot of people are banking with stokvels. In other words, a way to save little bits of money with someone else who will then bulk it and put it somewhere else. What is the solution for that? How do we cheaply get cash back into the system in order to facilitate savings? Now, these are not easy problems to solve, and they do require a lot of innovation. And you have to consider which tier of the public-private sector has actually got to deal with the problem. For example, if you want to get small savings back into the system, perhaps government should step in and say, until we have critical mass, in other words, that entire 45 billion is back in the system and being rolled over and earning float and being self-sustainable, perhaps government should step in and say, we will pay those transaction fees until we reach a point of break even. Or do we do a public-private partnership to implement something to this respect? Because it's unlikely that private sector institutions will find this a profitable game to begin with until there's critical mass. Okay, moving on then to how do we have a look at our financial inclusion in South Africa from a payments perspective? Now, what I've used here is the Committee on Payments and Market Infrastructure, as well as the World Bank. They've done a paper called Payment Aspects of Financial Inclusion, which set out a very nice model for looking at a country's payments environment and whether it's working for financial inclusion. I've used that to analyze it, our financial inclusion going forward. What we have fortunately got, World Bank was here in 2015, and they have a report, it's only in draft at the moment, on achieving financial inclusion in South Africa from a payments perspective. And I'm hoping that report will soon be in the public domain so that you can have a look at it and consider it. What this model says is, to begin with, you need universal access, which from a South African point of view, we can kind of say perhaps we have in place, but it needs frequent use. That from a South African viewpoint, we know we don't have. Most of our stuff is cash-based. But there are drivers to that access and usage, and they're also critical enablers. And the critical enablers are the big thing. Do we have commitment from the private and public sector? Do we have the legal and regulatory framework in place to accommodate the financial inclusion issues that we want in those transaction accounts? Do we have the infrastructures in place? Then as well, we have the drivers of access and usage, which is the design of your product, clearly. Whether you have the access points, can people readily access your services? Awareness, financial literacy, and large volume payments, similar to our social grant system. But underlying this entire model, and I think that is the important thing, is having and making use of a transactional account. Now, I don't think anybody is saying it has to be a bank account, but it's a place where people can store value and do the transfers in and out of that transactional account. It's the initial step to becoming financially included. It serves as a gateway to all other financial services. You know for yourself, if you're taking up credit, you don't get one unless you don't get credit unless you have a bank account for that debit order to go against. Also, with insurers, it's very likely that they will accept cash payments for insurance. Okay, so this is the model, and it's based on this model that I've analyzed financial inclusion in South Africa, what we have. So if we have a look at the critical enablers, now on side of public sector commitment, I think the major issue is the Financial Sector Regulation Bill. I don't know if anybody's seen it. Maybe it might be. Thank you. At least one person has. This is major financial sector legislation reform that's coming through with the Twin Peaks regulation that's going to set up the prudential regulator and the market conduct regulator, two separate regulators to regulate and supervise the system. But that piece of law does require all regulators and all interested parties really to look to financial inclusion when they're assessing their business and their supervisory practices and their regulation. In other words, not to do anything to undermine financial inclusion initiatives, which is a major step forward. We've never had it before in law before, this commitment to financial inclusion. You might ask yourselves, what about the Financial Intelligence Centre Act? And I do think now that they've moved to a more risk-based environment, maybe it will improve. From the other piece of law, and it didn't used to be law, the Financial Sector Charter was always a voluntary code, but the Financial Sector Code has been promulgated in regulation in terms of the BEE Act, so it is law. There are issues on whether it's a piece of transformational rather than financial inclusion legislation, but be that as it may, that Financial Sector Code does have access targets that in order to earn your BEE points, you need to achieve those access targets. So that has been a commitment both from the public sector and the private sector. In the public sector, we do have as well a draft financial inclusion policy and an implementation plan for that policy, as well as plans to set up a forum of all interested parties to discuss financial inclusion and how you take it forward in South Africa. Because government by itself cannot implement financial inclusion. It has to be buy-in from all players into achieving financial inclusion and the usage that we're looking for across South Africa. In terms of the legal and regulatory framework, the big acts here are the Banks Act and the National Payment Systems Act. Both of those, to a certain extent, certainly the Banks Act, excludes all small players. You need to have, entry-level capital, which would relate to your operational risk of 250 million. That's entry level, just to get into the banking sector. So that definitely is a barrier to entry that needs to be addressed. And the national payment system does not have those same restrictions. But in all these changes, we need, in reviewing all these acts, and it will happen under Twin Peaks, all the sectorial laws are going to be reviewed, we need to make sure there's a way for non-banks to enter into the formal legal framework, but ensuring, of course, that they're level playing fields. In other words, that one party is not discriminated against or does not have an easier ride than another party. You have to make sure the playing fields are level for everybody to enjoy the game. All right, the other acts, Twin Peaks, of course, there's a lot of work still being done, Twin Peaks, as to the roles of the various parties in the national payment system. What is the market conduct authority's role going to be? And that's the Financial Sector Conduct Authority's role going to be, versus the Prudential Authority, the supervisor, versus the systemic oversight that the Reserve Bank currently has under their belt and will be formally given in terms of the Financial Sector Regulation Act when it's promulgated. So those roles and responsibilities haven't been absolutely ironed out, but at the moment, the National Payment System Division within the SARB really has current authority for both market conduct and prudential and systemic. So they have across those three objectives. In terms of financial and other infrastructure, what Treasury has done a lot of work on the SMEs and attempting to put credit infrastructure in place. Now, what do we mean by credit infrastructure? For example, if you have a credit bureau for an SME, it's much easier for credit providers to assess whether they want to take on the risk of that SME. At the moment, we don't have that kind of credit infrastructure. We need to put that in place. We have a really wishy-washy partial guarantee scheme in South Africa. We need to strengthen that and improve it. What we also need for SMEs are movable asset registers. So in other words, if you want to offer your tables and chairs as collateral for a loan, you can do that, and it's notated in a movable asset register for all credit providers to see. There's a lot of work also I don't know if you've heard of SACRA. They're doing a lot of work around credit information. It is a private sector body, and they're doing it with the private sector. Very useful work they're doing. The other financial infrastructure that is very important is being done by BankServe is what the banking inquiry, I don't know if anybody remembers the Jolly Commission in 2008. The banking inquiry requested a FICA hub, that National Treasury initiate a FICA hub, which would be a very useful thing. In other words, your FICA documentation resides in a central place that anybody can access. So you don't have to be re-FICA'd. If anybody wants to check your FICA documentation, you go to the central hub. The thinking around that has changed. In other words, we don't believe we should port documents into a database because somebody's got to maintain the security around it. What we should have, rather, is the source of pristine data. In other words, your ID sits with the Department of Home Affairs, and to verify you sits at the Department of Home Affairs, and everybody should be able to access that information without you necessarily schlepping all your stuff there. They should be able to see it on the database, as well as address and address verification. So from a FICA point of view, which will simplify not only the institution's lives, but the lives of consumers. But the other issue, and I think this is one area where we feel, where National Treasury felt quite strongly, is the banking sector is actually not there to be policemen. Because there have been initiatives, for example, that the banks should police online gambling. You know online gambling is illegal in South Africa in terms of the Gambling Act. Do you? So if you're doing it, if you want to gamble, you have to go to a bricks and mortar. Yeah, the one of those bricks and mortar places and do your thing. So if you online gamble, it's illegal. But the idea is that banks should actually police that and make sure that you don't have access to funds to do. Now, we feel strongly that's not the job of the banking sector, to be policemen. And to a certain extent, a lot of government departments have looked to the banking sector to be their policemen. And the one area is the Department of Home Affairs, who require banks to make sure you in South Africa legally before they give you a bank account. Now, that adds incredibly to a bank's cost when they are including people, is they have to check whoever comes, not only your ID and a verification of your address if the FICA exemption doesn't comply, but if you're a foreigner, they need to check that you're in South Africa legally. And if you're not, they need to report you to the Department of Home Affairs. What happens then, we're not quite sure. But banks, I mean, really, is that the bank's job to do that? And it adds to cost, and we feel that kind of thing should be stopped. But we have yet to be able to convince, now I've left, thank goodness I don't have to think about it anymore. Who is going to convince the Department of Home Affairs that that's not the bank's job, it's actually the police's job to make sure that people are here legally or not? I mean, nobody asks Pick and Pay when you go and buy bread whether you're in South Africa legally. And it's actually wrong. At least people should have to be able to remit money to their family wherever they are without the threat of being arrested or whatever. But we won't go there. We feel quite strong. I mean, I felt quite strongly about it. Right, then on information technology and that infrastructure. And I think here it's location, but for us it's interoperability. If you come up with some marvelous innovation, you can't sit with your innovation and say, here I am, everybody come to me and play in my party. No, you say, where's the party? And there it is, the national payment system is the party. Your innovation has to conform to the national payment system and fit into it. And I'm not saying they're not restrictions, but these things need to be interoperable. And to say that because it's an innovation, I need to milk this innovation for several years before I make it interoperable. Well, that is one way, these small proprietary systems, that is one way of really blocking financial inclusion. Everybody needs to be able to use these regardless where they are. I mean, talk about domestic remittances. I can only at the moment do a domestic remittance from Checkers to Checkers. Wouldn't it be nice if I could do one from Checkers here to Pick and Pay somewhere else? Because there's not always Checkers and Pick and Pay in the same area. But the point is it's not interoperable. The same thing with mobile payments. They're not interoperable. If every bank has their own, every provider has their own little system, we need to make these interoperable. And then, of course, there's always fair and open access. Everybody should have access to, and I'm talking about service providers, fair and open access to the environment, subject always to the financial sector objectives of stability, market conduct, and inclusion, to make sure those happen. So those are the enablers. Let's move on to the... Am I running out of time? Oh. Okay, sorry, I thought I had made a short presentation. All right, sorry. Sorry, it's a long presentation. I'll go through these quickly. The design of the product. If you talk about SASSA, for example, incredibly, I mean, and it's a government product, so we're very distressed. Badly designed. Why? Because beneficiaries have no choice. That's not acceptable. Beneficiaries must be able to choose the bank they want to have their bank account with and be free to establish a relationship and sort out all the problems there. If there's a debit order, at the moment, their bank that they bank with, which is Grindrod, has, I think, 3 or 4 branches. I mean, how do they fix the debit order abuse if they cannot go to a branch and ask people what's happening here? Okay, so we need that. We need interoperable, low-cost, small-value cash-in mechanisms, readily available access points. And I'm sorry, I'm from government. SAPO is sitting out there with this unbelievable infrastructure asset that we need to use. Why can't it open up for all banks and put in an entry-level bank account that can be opened, and you can choose, beneficiaries can choose, I want to go to Nedbank, but I can go to SAPO to open that account. Interoperability, I've discussed that. Financial literacy, we need to support. We do have a National Consumer Financial Education Committee that has all players on board to take forward financial literacy in South Africa. That needs to be strengthened. We need training at point of presence. a lot of people, you need to train them at the decision making. And really, the thing with training is it may not impact your behavior. We all know over-indebtedness is bad and that we shouldn't take more credit than we can afford, but we do it anyway. So training is not going to help you. Very well aware of the problem, but you don't implement it. And treating customers fairly, that disclosure. Leveraging large volume, and this is, I think, where government has a big role, and the regulators. We need standards for if government departments want to do transactions in the payment space, there need to be standards for them. In other words, standards like interoperability. We can't have a tender process that relates in an on-us solution, and that's the only solution there is. This tender process needs to be jacked up. We need standards from the regulator on there. And that's it. Thank you very much. If there are any questions.
Any questions, ladies and gentlemen?
Yes.
Question over there.
Sorry.
Hi, Ingrid. Thank you for your presentation. Just want to correct one of the remarks you do in terms of interoperability in terms of local money transfers. Some of the retailers decide to work together, so PEP and ShopRite was already working together. You can do a cash out in PEP, you can do a cash out at ShopRite, or any other 7,000 apps activities.
That is fantastic news. Brilliant, yes. Absolutely brilliant. And everybody else is coming on board too. Okay, you'll network around this. Brilliant, yes.
So any other questions? I think with regards to that point there, PASA is definitely responsible to look at a domestic money transfer system, an interoperable, a fully interoperable system. I agree with that.
I think the other thing that PASA is working on is an interoperable cash-in system.
Yep.
In other words, to enable small deposits, because we really believe strongly that. Oh, is this the next session already?
Yes.
Oh, okay.
So
Thank you very much.
Before we